Welcome back to the Michael Gaddis Show. I am your host, Michael Gaddis of michaelgaddis.com. I am also the CEO and NMLS licensed broker of Frontier Loan Group, Inc., or as we call it, FLG. FLG is licensed by the California Bureau of Real Estate as a real estate broker, license number 01449152, NMLS ID number 345305. I am also licensed by the California Bureau of Real Estate as a real estate broker. My broker license is 0143380, and my NMLS license is 280011. Last Saturday, I attended the 2015 Golden Future Expo in Culver City, California, and I spoke to numerous seniors about reverse mortgages there. First off, I couldn't believe the amount of misinformation out there. I mean, I honestly just could not believe what I was hearing. It was crazy, some of the misconceptions that are out there. However, right now I want to spend a little bit of time going over some of these questions that I heard. One of the most frequently asked questions had to do with, what do I need to qualify for a reverse mortgage? And in order to qualify for a HECM reverse mortgage, the borrower must, 1, be 62 years of age or older, 2, own the property outright or have a very low loan to value, meaning you have a lot of equity in your house. Number 3, you must occupy the property as your primary residence. Number 4, you must not be delinquent on any federal debt. And number 5, you must be able to continue making payments on ancillary property charges such as property taxes, insurance, HOA fees, Mello-Roos, etc. And number 6, complete consumer education counseling by a HUD-approved HECM counselor. So one of the questions I got a lot was, or stories I should say, was I know someone who lost their house with a reverse mortgage. They just foreclosed on them. And I said, they just foreclosed on him. What happened? And, as I dug a little bit deeper into the facts, it turned out that, the requirement there I mentioned that be able to continue making payments on ancillary property tax or property charges such as property taxes, insurance, HOA fees. What had happened was, at least in most of the stories, the borrower had stopped paying their property taxes. And so while the loan was, negatively amortizing, they weren't in default on the actual note itself. They weren't keeping up on any of the, either the property taxes or the insurance. They were basically not paying the ancillary charges. They just assumed that they didn't have to make payments on their house or anything related to their house. And that is not true. You have to be able to continue making payments on ancillary property charges, which is one of the reasons why there was a change to reverse mortgages this last April, when they put in a financial assessment criteria. Because in the past, there was no financial assessment criteria. It was basically just age and income related, and it was very simple. Now they're putting in this financial assessment to make sure that you have the ability to continue making your property taxes, insurance. Now, some of you are like, well, why didn't they do that? Well, it could be numerous factors. I mean, it could be that somebody didn't fully explain it. There's a lot of things that could go into why somebody would believe that they didn't have to make those payments, which is another good reason why they put in the complete consumer education counseling by a HUD-approved HECM counselor, because that way the counselor can ensure that the borrower knows exactly what their responsibilities are, what a reverse mortgage is, and what their responsibilities are. So another thing is that I was asked at the Golden Expo was, how long can a borrower live in their house with a reverse mortgage? There was a couple people there who were swearing up and down that you could only live in there until, 20-something years, whatever your life expectancy was. And after that, you were going to get thrown out. I heard that quite a bit. And that's not true. Basically, a borrower cannot outlive a reverse mortgage. As long as at least one of the borrowers continues to live in the property as their primary residence and continues to make payments on all property-related ancillary charges such as property taxes and hazard insurance, the loan will not become due. So basically, you have to continue living in the property and you have to keep up with the terms of the reverse mortgage. And as long as you do that, they can't kick you out. So the next question was, when does a reverse mortgage have to be paid back? Well, basically, it has to be paid back when the last surviving borrower dies, sells the home, or permanently moves out. That's the general answer to that question. So another thing that I was asked a lot is what happens to a borrower's loan balance with a HECM reverse mortgage. A lot of the people who were there didn't understand what a reverse mortgage was or how the mechanism of it. They didn't understand what it did. And so I had to explain to them that basically it's a negatively amortized loan. So if you're not making payments, the payment has to go somewhere. So instead of you making the payment, it gets tacked on to your unpaid principal balance. So that's kind of what happens there. And so a lot of people didn't understand that. I had to really explain it to them, and kind of ease their mind about, what was happening there. Another thing that I was asked a lot about are the fees associated with reverse mortgages. And that is a very, very complicated question because it depends a lot on so many different factors. So it's very difficult to give, a unilateral type, here it is. And that kind of scared some seniors because they were like, well, how come you can't give it to me? How come you can't tell me? Well, it depends on what your program is. It depends on what your loan balance is. Can you pass the financial assessment? Now, you're going to have your standard fees. You're going to have your title and escrow fees and your mortgage insurance fees, premiums, things like that, your normal standard closing costs. And it's possible that you might have an origination charge by your loan officer, but in most cases, a lot of cases, I'll say, you probably won't even pay that. So it's very difficult until we sit down. And that's why I tell people reverse mortgages are best assessed on a case-by-case basis. And it's not something I can do at a Golden Expo in Culver City in 5 minutes when you're rushing over to get the free gift at the front door. I can't do it. You need to sit down, analyze your situation, and really take a good look at it. Another guy came up to me, and he was a very nice gentleman. And he told me, he says, I'm afraid to get a reverse mortgage because if I do, I'm going to be trapped. They're not going to let me out of it if I want out of it. And I said, no, that's not true at all. You can refinance out of a reverse mortgage at any time. Now, here's the problem of that, and I'm going to say that with a little asterisk, and right now I'm putting up my fingers and putting a little asterisk here. Here's the problem, is that because if you want to refinance, put it this way, the financial assessment to get a reverse mortgage is different than the income analysis used in refinancing. So you have to be careful because if you're thinking about you want to refinance sometime and refinance out of it, you might really want to think about whether you want a reverse mortgage at all because you could get into it and then not meet the financial requirements to refinance out of it. So his question is kind of the answer to his question is twofold. One, you can refinance out of it, but two, just to be honest, basically you could have problems refinancing out it depending on what your income and your debt to income ratios, and there's so many factors there. So that is something to be thought about. If it's one of those things you're considering and you're saying, well, I need to, I might want to refinance out of it at some time in the future, this might be a consideration that might tip it towards maybe not getting a reverse mortgage in that scenario. So and here's the last one I'm going to mention here today is who holds title to the property in a HECM reverse mortgage. A lot of people believed that the bank owns the title to the property, and that is absolutely not true. In a HECM reverse mortgage, the borrower retains ownership to the home just as the borrower would in a regular mortgage. And this is perhaps one of the biggest misconceptions about reverse mortgages, and it was the most frequently asked question at the Golden Expo. So, well, that about does it for today. I want to thank you all for listening to the Michael Gaddis Show on KCBQ AM 1170 The Answer. I am here every Wednesday night at 8 p.m. discussing anything and everything related to real estate. If you want to contact me with questions or topics for the show, please feel free to email me at michael@michaelgaddis.com. Contact me via Twitter at MGJDRealty. Call me at 888-242-2272. Visit my Facebook page at www.facebook.com/Michael Gaddis Realty Group or visit my webpage at michaelgaddis.com. Remember, I'll be at the Golden Expo at Oceanside Harbor Days this Saturday and Sunday. Please stop by and see me. Other than that, you've been listening to the Michael Gaddis Show on KCBQ AM 1170 The Answer. Good night, San Diego.